Hey folks, welcome to a tool demo at Finominal. Today we're going to showcase the fund analyzer tool, which allows you to benchmark the performance, review factor exposures, quantify the alpha, and many more things of a mutual fund or ETF. And you can access this tool simply via the tools menu. It does not require registration or cost. You can simply go and play. So let me demonstrate that with regards to one ETF here, which is SPLV. This is Invesco's S&P 500 Low Volatility ETF. And we're simply going to click Analyze. That takes us to the first screen, where we do see here the ticker or the product versus a benchmark that we can change, or the suggested benchmark, which in this case is the MSCI US Min-Vol Index. Now, as you can see here, there's a bunch of performance stats, and there's a few tabs down here. There's alpha and factor exposures, there's risk, diversification, fee reduction, return prediction, and fund replication. I'm going to go through each of those tabs and subtabs pretty quickly. They're hopefully self-explanatory, and if not, do let us know. So first thing is we're going to kick off with is this benchmark analysis in the sense of what is the right benchmark for this ETF. As shown earlier, the suggested benchmark is the Min-Vol index, which kind of makes sense if you're discussing a low-vol product. And so we can see over here is the performance benchmarking of SPLV versus S&P 500, which I can change, by the way, to any other index. And the suggested benchmark, the MSCI US Min-Vol index. We do see effectively that SPLV has underperformed since 2012. We can also see that a little bit more clearly in this exit return chart, where you can see the cumulative exit return is negative versus the S&P 500 or even versus the US Min-Vol index. Further down, you also do see things like, for example, a fund overlap analysis. You can see SPLV has 102 holdings. S&P 500 in this case has 505. You can see it's an overlap of 101 stocks, which percentage-wise equates to 21%. You can also see other things like the distribution by months, you have any tail risk and like performance that's done here. Now, let's move on to more interesting topics in terms of what the portfolio of this ETF actually is comprised of. And so here we can see a holding space factor exposure analysis, where you can see the median stats of SPLV versus the selected benchmark, which is S&P 500, for a few different fundamental metrics, like value-based metrics, growth, market cap momentum, volatility, and profitability. You can also see that in a chart form, which in this case does look quite, well, difficult to see. It's kind of like very similar to the index. Index is around 50, but you do see on this one column here, which is volatility, the score is close to 100, which is the best score. And it simply means that the stocks in this portfolio are far less volatile than the average stocks in S&P 500, which is as expected. If we want to move from a holding space factor exposure analysis to a return space factor exposure analysis, we can do that over here. We can measure the exposure to asset classes and to factor betas. And what we will expect, of course, is that it is an equity product, which you can see over here. It has exposure to the S&P 500, and we see consistent positive exposure to the low volatility factor, which is a pink line. You also do see the consequence, which might be an unintended consequence in terms of, for example, that low vol stocks tend to be more expensive because the beta to the value factor is negative. Same thing to quality and so on. You can also see that in terms of from a resources perspective, either on asset class level or on equity factor level. Now, you could question, has this fund generated any alpha? Now, this is a smart beta ETF where we do know that it specifically is created to provide exposure to low vol stocks. So I think in this context, alpha is not perfectly applicable because alpha is the unexplained return, and we can explain the return quite well. R squared is 0.84. This is more useful if you have a mutual fund, and then you can look at things like the cumulative return contribution which in this case is primarily the stock market and equity factors. And if you want to drill down into which equity factor, as per the fund we're looking at, it is primarily the low volatility factor that explains the performance of this fund. Now, that's with regards to factor exposure analysis, benchmarking, and alpha. We can move on to analyzing the risk of this ETF. So we do see, for example, here the top 10 stocks. We see the risk-based asset allocation. It's primarily stock market with a little bit of equity factors. Again, which equity factors? It is the low vol factor that explains the performance. Down here, you can also see in terms of holdings-based allocation, markets, primarily US exposure, and large cap stocks, given that it is select stocks out of the S&P 500. If you do want to look in terms of the top 10 stocks, for example, you can see over here, Berkshire Hathaway is the largest stocks with a 1.5% weight. You can do things like breakdown by sectors, markets. Here we can see, for example, the largest overweight in this case would be, here we see an overweight to financial stocks, which indicates they're less volatile. You can see also the difference over here, right? For example, for tech stocks are more volatile, so the weight in SPLV is lower. If we move on to drawdowns, so you can look at this low vol ETF from a drawdown perspective, how it's done versus the S&P 500, or during periods of market crash, like 2022, COVID, and so on. Finally, you can look at the exposure, specifically the correlation of this fund versus certain macro variables like US GDP, inflation, bond yields, inflation, and how this fund does compared, in this case, to the S&P 500. So that's with regards to risk. Often when you look at a fund, you wonder if this fund diversifies. So here, effectively, we have this diversification analysis. You can see here's a diversification score that ranks from 0 to 100, 100 being best. This product has a low score, and we can explain that simply because the correlation to stocks is still very high, 0.85. So it's an equity product, it doesn't diversify, there's better strategies for that. Then we can move on to fee reduction. So for example, let's say you do like the exposure, i.e. low vol stocks, but you don't like the product from Invesco, or you wonder, is there something cheaper? Usually there is. So in this case, what we've done, we are highlighting a few products here from Spider, iShares that are all min vol or low vol products, but are lower cost. And you can see that there's, well, about 10 products, right, that are all cheaper. If you do want to analyze those further or compare them, right, you can simply click on them. You can click then view an asset comparer. So this is another tool. We can simply compare multiple funds or portfolios to each other. Going back to the fund analyzer, so this is regards to fee reduction. We can also talk about return prediction. We're very cautious with regards to predicting returns, so this should be used with well, a big grain of salt. This is effectively the expected annualized return for SPLV using capital market assumption from the largest asset managers and brokers, because we do know what the fund is providing exposure to from a factor perspective. We do have those forecasts from the asset managers and brokers, and then we can create effectively base case return, optimistic case, and a pessimistic return. And the final tab over here is fund application. This is more useful for alternative strategies, simply because often you find strategies that seem to be less volatile than the stock market, but still seem to decrease or feature the same drawdowns, and we call those diluted equity exposures or equity proxies. They don't really contribute much value. And so what you can see over here is a simple application targeting the same volatility as SPLV, but we're simply using the S&P 500 and cash as building blocks. And in this case, actually, you see that you could have simply replicated the SPLV product with the same volatility, just using 86% and investing in S&P 500 and having 40% cash, and you would have had a higher return. But as mentioned, this is more useful for alternative strategies. Now, that's a demo for the fund analyzer tool. As you see, we have these different tools here, right? We discussed benchmarking, alpha exposures, risk diversification, fee reduction, return prediction, and fund replication. And hope this was useful. We always do appreciate feedback. So if you have any, just write us an email, get in touch, Twitter, LinkedIn, or other medium. And yeah, hope that helps. Have a nice day.